Hi, my name is Imarawati Zamri. So I will be presenting for our group 8 from 21B, for company Eco Group Berhad for profitability ratio from 2021 to 2023. First of all, we're going to look at the profitability ratio. We will look the following key ratio each year, which is return on total asset, return on stakeholder equity, return on common equity, operating profit margin, and also net profit margin. For return on total asset is 7.92%, return on stakeholder equity 70.75%, return on common equity 70.75%, operating profit margin 8.40%, for net profit margin 5.83%. This year demonstrate a strong profitability, especially in returns on equity for 2021. Next, we move to 2022, where return on total asset is 4.68%, return on shareholders equity 8.37%, return on common equity 8.37%, operating profit margin 6.33%, net profit margin 5.65%. The decrease in this ratio indicates some challenge faced by the company during this year. For 2023, return on total asset 3.86%, return on stakeholder equity 6.42%, return on common equity 6.42%, operating profit margin 4.52%, net profit margin 4.33%. We see the further decline suggesting a growing profitability concern that the company needs to address. Eco Group Berhad have faced decreased profitability ratio over the past 3 years. It's essential to explore the underlying reason for this trend and consider strategy for improvement moving forward. For now, let's explore liquidity ratio. For liquidity ratio are important financial metrics that indicate a company ability to meet a short-term obligations. Let's start with current ratio. For 2021, 3.37, 2022, 3.78, 2023, 3.53. This indicates a healthy liquidity position with a slight decrease from 2022 to 2023, after a peak in 2022. Next, we have the quick ratio. 2021, 2.44, 2022, 2.95, 2023, 2.72. The quick ratio showed an increase in liquidity from 2021 to 2022, followed by a slight decline in 2023. This ratio excludes inventory, giving a better picture of immediate liquidity. Finally, let's look the inventory to net working ratio. 2021, 34.53%, 2022, 32.83%, 2023, 31.87%. This percentage indicates how much of the net working capital is tied up in inventory. A decreasing trend here may suggest improved efficiency in the managing inventory. Eco Group maintains strong liquidity ratio despite slight fluctuation over the year. This indicates a well-managed approach to short-term financial obligation. Next, we will discuss about leverage ratio of Eco Group Berhad over this past 3 years. Leverage ratio are critical as they help assess the company financial structure. The key ratio we will cover include debt to assets, debt to equity, long-term debt to equity, time interest earned, fixed charge coverage. For yearly breakdown, 2021 total debt to asset 0.226. For 2022, 0.23. And for 2023, 0.1895. Now let's look to debt to equity. For 2021, 0.2861, 2022 debt to equity 0.30, and 2023 0.2338. And move to long-term debt to equity 0.1284 for 2021. For 2022, 0.13, and lastly for 2023, 0.1050. For the time interest earned, 2021 30.83 times, for 2022 8 times, and for 2023 30.76 times. And the last one, fixed charge coverage for 2021 5.41 times, for 2022 3.33 times, and the last one for 2023 4.71 times. To the debt to asset ratio decreased from 2021 to 2023, indicating improved asset utilization. This equity financing, there are a slight decrease in debt to equity, stronger equity backing over time. The times interest earned dropped in 2022 but rose again in 2023, indicating fluctuation in earning stability. Fixed charge coverage, the decrease in the fixed charge coverage suggests increased fixed cost which could require monitoring. The leverage ratio provides essential insight into Eco Group Berhad financial health. Continuous monitoring and strategic financial management will be vital moving forward. Now we will analyze the efficiency and effectiveness of Eco Group Berhad in utilizing in asset over these years by we look at activity ratio. First, we will look at inventory turnover. 2021 2.57, 2022 3.72, and 2023 to 3.4. Observation: general increase from 2021 and 2022, slight decrease in 2023. Fixed asset turnover: 2021 0.46 and 2022 4.26, 2023 5.20. Significant improvement indicating better utilization of fixed assets. Total asset turnover: 2021 0.97, 2022 1.06, and 2023 1.20. Steady increase suggesting enhanced overall asset management. For the next one, account receivable turnover: 2021 4.29, 2022 3.95, 2023 4.20. In 2022, followed by a recovery reflecting improvement in collecting receivable. Average collecting period 2021 85.30%, with 85.30 days. For 2022 92.45 days, 2023 88.42 days. Fluctuation suggesting variability receivable collection, but overall improved collection efficiency. Eco Group show promising strength in asset utilization efficiency, especially in fixed assets turnover. Focus on stabilizing inventory turnover and improving account receivable management. Lastly, we will look at Eco Group Berhad shareholder return ratio. Let's look at data for the years 2021, 2022, and 2023. For dividend yield on common stock for 2021, 1%, and also the same thing at 2022, also 1%, and 2023, it decreased from 1% to 0.93% for dividend yield on common stocks. We move to price earning ratio. For 2021, 70.1%. 2022, it's 71.1%, consistent with 2021, and 2023 also consistent 70.1%. And for the next, we will see about dividend payout ratio. For 2021, dividend payout ratio 34%, and from 2022, it's 27.7%, and for 2023, 22.99%. And lastly, we will look at cash flow per share. For 2021, cash flow per share RM 0.010. For 2022, RM 0.195. For lastly, 2023, RM 1.93. Alright, for 2021, we will see that a reasonable dividend yield and payout indicate confidence in generating shareholder returns. For 2022, despite maintaining the same dividend yield and price earning ratio, the decrease in dividend payout reflect a strategic approach and Raven's capital. For 2023, we noticeable improvement in cash flow per share, even with a slight decline in dividend yield and payout ratio. So, in conclusion, Eco Group Berhad has shown stability and its price earning ratio while strategically managing its dividend yield and payout ratio. The increase in the cash flow per share over the years is a positive indicator of the company financial health. That's all from our group. Thank you.